For decades, the US dollar has served as the world's most trusted currency. Not only has it been the world's reserve currency, but it has also earned a reputation as the trusted safe haven during global economic turmoil. Today, however, the dollar is in a crisis of confidence and its reputation is deteriorating, putting the retirement savings of millions of Americans at stake. Now, historically, market turmoil has sent investors running out of stocks and other risk-on assets and into the dollar. This time, however, it's different. The dollar is down more than 8% so far in 2025, plunging 4.5% in April alone. Now, instead of reinforcing the dollar's strength, the Trump tariffs and recent market volatility have actually added to investor anxiety and has driven capital away from dollar-based assets as a whole. Goldman Sachs has called this a confidence crisis. Chief economist Jan Hatzius states, "With all due humility, I believe that the recent dollar depreciation of 5% on a broad trade-weighted basis has considerably further to go." Now, keep in mind, foreign investors who hold over $22 trillion in US assets are now pulling back, especially from US stocks, but also from US bonds. And as the dollar falls, stocks grow even riskier. Now, with the current annual deficit of $1.1 trillion, the US depends heavily on foreign capital inflows. A slowdown or reversal in that flow could accelerate the dollar's decline and shake global markets. And economists see worrying parallels to past dollar down cycles that we saw in the 1980s and the early 2000s, when the dollar actually lost up to 30% of its value. And many believe that we're entering into another prolonged decline. Joe Bruselas, chief economist at RSM, warned both institutional investors and central banks are having to begin to think about what would happen should the dollar and the treasury market no longer be the safe haven. And HSBC's Frederick Newman added that bond market volatility is likely to continue, putting further pressure on the dollar. Now, it's important to understand that multiple forces are undermining confidence in the dollar. We have recession fears, which are fully on the table. The IMF projects the US GDP will fall significantly in 2025, slowing economic growth and undercutting a key dollar strength pillar. Stagflation is also a threat that investors are concerned about as inflation fears begin to climb and recession brings stagnated economic growth. Higher inflation will reduce real returns and spook treasury buyers. The US interest payments on our debt alone has hit almost $1 trillion in 2024, and this fiscal imbalance is having huge implications for confidence in the US system. And we also have stock and debt risk, where US household stock exposure is at near record highs at the same time that US consumer debt is climbing, and a major correction to stocks could cut consumer spending and GDP dramatically. This is all coupled with the global shift away from the US dollar. The BRICS nations and other geopolitical rivals are accelerating de-dollarization, and the euro and yen are gaining ground. The dollar may be losing its unipolar dominance in a shift towards a multipolar currency system. If the dollar continues to fall, effects on the US economy could be very severe. US consumers and businesses will pay more for goods from abroad, adding to inflation. Americans traveling abroad will have less bang for their buck. Central banks may diversify into other currencies, weakening the dollar further and raising US borrowing costs. Higher interest rates may be needed to attract capital, and this has a further crippling effect on the economy and growth, making debt more expensive and, of course, more expensive to service as well. Stocks and bonds could face more risks as foreign capital exits, and if other countries devalue their currencies in response, global trade could suffer. And as recent record prices reflect, physical gold stands out as a reliable hedge in times of monetary and economic instability. Money is flowing out of stocks and bonds and the dollar and into gold at record rates. And remember that gold usually rises as the dollar falls, helping to preserve purchasing power as fiat currencies lose value. Now, during times of financial or economic crises, gold attracts investors, boosting demand and price, and we currently see gold taking that spotlight away from US treasuries. And furthermore, central banks are stockpiling gold to diversify away from the dollar. And this is bolstering investor confidence that gold is the place to be. As history shows us, gold has consistently outpaced the dollar during inflationary and currency crises. And as the dollar's troubles mount, protecting your financial future becomes even more urgent. If you're concerned about the direction that we're headed and you're looking for a way to protect and hedge your portfolios against inflation, currency decline, and market turbulence, I'm Mackay Block with American Hartford Gold. Give us a call today and we'll discuss how adding physical precious metals into your portfolio can give you the hedge that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.